Saludos amigos, Kash here, President and CEO of Real Estate in Las Terrenas.com. Hey guys, today I got a really cool interview for you guys. You're going to learn a ton of information. I'm here with my good friend Joe. We're in Canada and he's going to teach you guys exactly how to utilize your line of credit from your home to purchase a beautiful home in Las Terrenas, Dominican Republic. Stay tuned. Saludos amigos, Kash here, President and CEO of Real Estate in Las Terrenas.com. Guys, today I'm going to be bringing you some really good information. Information that you guys have been looking for. A lot of you have watched my video on the top 5 ways I feel you can finance your dream property in Las Terrenas, Dominican Republic. And today I was fortunate enough to get a few quick minutes from my good friend Joe, who is going to be explaining to you different strategies, rules, timelines, everything basically that you need to know when you look to utilize one of my strategies, which is your home line of credit, to be able to pull from that and purchase your dream property with us in Las Terrenas. So guys, today I'm going to go ahead and get started, and I'm going to introduce my good friend Joe Bondi. Joe, go ahead and say hi to everyone.
Hello everyone. Hola. Yeah. How's everything going?
So what Joe's going to be talking to you today about is a little bit about himself, okay? Because Joe is going to be fielding calls from everybody. We're going to be putting up his name, his number, his email address, all his coordinates, everything about him will be accessible to you. So if you guys want to take this further after, you're going to be able to reach out to Joe. So let's get to know Joe. Joe, tell us your background. Tell us how it all started. How did you get in business?
So I got in this business about 17 years ago. My wife at the time was a realtor, and getting into mortgages just kind of complemented her business. So had a lot of fun doing it. Started off with a couple of banks. Bank of Montreal ended up being top 10 in the country for that institution.
Amazing.
Then Royal Bank came knocking on my door. Okay. Moved over there, and for the last 8 years have been top 1% in the country for them. And then I decided it's time to take it to the next level and create my own brokerage so I can do a lot more with a lot.
That's amazing. So our timing is great for this conversation.
Absolutely.
So guys, my own personal home, I've actually worked with Joe when he was with RBC, probably about 2 years ago, I'd say now. And I can't say enough about how helpful Joe was in helping me utilize the equity in my home that afforded me the ability to do so many cool things. One, moving to Las Terrenas. Really, if it wasn't for your help on that, it would have been challenging to fund the kind of investments I've done over there. And my home line of credit helped me do a lot of those investments.
So I helped you with your tan, is what you're saying.
You helped me with my tan. I owe you that. Yeah. So as you can see, personally, he's been an amazing assistance to me. So now we're able to take Joe. He's with his own company that he has started up, the Super Mortgage Team, and he's going to be able to help you guys. So we know RBC was your the last major bank you were with, and now you're your own company. Explain to everybody how the process works when they do reach out to you and they found that dream property in Las Terrenas. What is step number 1?
Step number 1 is we interview every client, and we want to know what your goals are. Is this going to be a primary residence where you're going to spend the whole year there? Is it going to be a rental property? Is it going to be an Airbnb, or is it going to be half and half? And then we cater the product or the advice to your specific situation, because that's what's really important. Right now, the interest rates are near all-time lows. It's the perfect time to actually be investing somewhere else.
Totally, I agree.
Because, I mean, variable rates at less than 2% makes financing almost free.
It's
completely extremely cheap right now to buy an investment property or a vacation property for that matter. The nice thing about the different products that are available, when I was with the banks, I had one set of products. Now I have 36 different lenders with multiple different sets of products. So we're going to find the right product that's perfect for you, and we're going to set it up in a way that makes it tax efficient possibly,
Great.
Depending on how you're structuring, if you got rentals and so forth, or if it's going to be a primary residence. Unfortunately, you don't get any tax benefits, but
Okay. Actually, guys, what I'm doing here is I'm taking a few notes. Every time I talk to Joe, I end up taking notes because it's like drinking from a fire hydrant when you're talking to him. There's so much knowledge and so much experience there that I can't help but start writing down notes. So today, you guys are going to benefit from these notes I'm taking. So, Joe, explain for some of us that are novices in the financing world and we don't understand the difference between, let's say, a variable rate and a fixed rate. What's the layman's term of how would you explain this?
So a fixed rate is a guaranteed interest rate for the length of the term. So say you took a 5-year, you're going to be locked into that interest rate, whether rates go to 10% or they drop to 1%, you are locked in. That's what a fixed is.
Got it.
Fixed rates are normally closed. So
what does closed mean?
Closed means you're locked in. Think of this room, we shut the doors. The only way to get out is to jump through the window. If you jump through the window, you're going to get hurt. If you break a fixed rate mortgage, you're going to get hurt. There is a sort of penalty involved in that.
Very well put. Okay. And then you've got your variable rate.
And then you've got your variable, which is based off of the Bank of Canada's prime, and that's a floating rate. So as the Bank of Canada meets, say every 6 weeks and discusses the economy, whether they want to raise the prime rate or lower the prime rate or keep it the same, will determine what your rate is. So when you get a variable rate, you're not getting a number, you're getting an equation. So your prime rate plus or prime rate minus a certain number.
So when somebody reaches out to you for something like Las Terrenas to be buying, the way I look at what I'm doing in Las Terrenas, it's buying a plan B at times. Some people look at it, a lot of you guys out there, it's a plan B. The world is crazy right now. We all know that. That's no secret. So having a plan B makes people feel better. But also in a normal operating world, you have people that are buying properties in Florida, right? Canadians that buy properties in Florida, they buy properties in the Caribbean. So this isn't new.
It's not new
to anybody. So that guys don't feel that what you're doing is absolutely, you're leading the way and nobody's ever done what you're about to do. It's completely normal. And how long have you been supporting people and helping them do this throughout your career?
Well,
second homes, let's say.
Probably like in different countries in the US and the Caribbean. I've been doing that probably for the last 13 years.
That's amazing. Okay.
So basically we'd refinance their house here for the down payment. RBC USA or RBC in the Caribbean had a great program where we get the down payment from here and then they would end up financing the rest through our subsidiary over there. Now I know Scotiabank is down in Las Terrenas
it's there
as well. So you do have access to Canadian banks down there.
Yes.
And a lot of times they'll look at your Canadian credit to give you advanced standing down there.
And guys, that's something that I touched on my top 5 ways to buy your property. One benefit we do have being Canadians or Americans is the Dominican Republic has access to our credit file here. Hence why they will also help finance. That's one of the other strategies. Right now we're specifically looking at tapping into your equity that you've built up in your house. So we'll stay on topic with that. I won't venture off onto that other topic. But nevertheless, they do share credit systems and credit files. Would you be able to? How does it bleed in? Your services bleed into, let's say, the U.S., Florida, Caribbean, or Las Terrenas. Is there a dot that you connect, or can you handle everything right here for them?
I can handle everything on the Canadian side.
Yes.
But anything in another country has to be done by the banking institution in that country.
Got it.
So for instance, say you wanted to buy in the US.
Okay.
Each state has its own mortgage laws.
Okay.
So you'd have to be licensed in all 50 states for you to be able to do a mortgage anywhere.
Okay, makes sense.
Right.
And the one thing that Joe did explain to me too in the US is every individual state has their own laws and their own system of brokering. So one day, maybe we'll do an interview with somebody out in the U.S., but in Canada it's different. You can lend to anybody across the province or across Canada?
Across the country.
Okay.
Yeah. We're federally governed over here, so the mortgage rules are coast to coast.
Okay, great. So that's good to know. I know I have a few of you out in BC. Again, you'll be able to reach out to Joe. He's going to be able to guide you, give you some direction as well, and maybe even fund your dream property out in Las Terrenas via your home line of credit. Okay, so I'm going to jump back into the steps. The first step is You're going to do an interview with Joe. You're going to reach out. You're going to talk to him. He's going to figure out what your goals are. Is it going to be primary, Airbnb? Is it going to be purely a rental? Let's jump into step number 2.
So number 2 is we got to see how much equity you can get out of your house, because that's your down payment.
Okay.
And then depend, if you're buying in Las Terrenas, do they want 35% down, or do they only want 20% down? So once we know what those rules are, which with the banks down there,
yes,
then we'll know how much equity we need out of your property. So the nice thing about doing the refi here is you eliminate the exchange rate risk.
Okay. Yes.
Right? So if you were to take all the money from Canada and invest it down there, and the Dominican dollar is up, it could cost you more money over time, or it could cost you less money if it goes down. So
very good
you
point.
Take out the exchange rate risk, especially in the U.S.
Yes. We just saw it almost
thing.
come to par at one point there, right?
A few
4 or 5
years
months.
back.
A few years back, yeah. But a few months ago, it did pretty good too, right?
It dipped a few months ago as well, which was a great time if you were trying to buy
at that moment, yeah.
But if you're trying to sell U.S. dollars,
not so good.
Not so good.
Exactly.
And, you know, if you were a year ago, the U.S. dollar was close to an all-time high.
Yes.
So if you're trying to buy, you're paying almost 45 cents on the dollar to be able to buy extra, right? Whereas you only have to worry about that on the 20 or 25% down payment versus the full 100% of the purchase price.
Got it. Now, so in Las Terrenas, Banco Santa Cruz, I specifically have done some deals with them, and over there, what they are financing is they will finance 50 to 70% of your project. So you have to come up with 30% of the amount owed. 30 to 50% is what you have to come up with.
Right.
So that's the current situation as far as I know it. So it kind of gives you a little bit of an
makes
idea.
it, and the property values down there are much less than they are here.
Bingo.
And with our property appreciation, you can almost get the down payment for free, because
yeah, exactly.
I think year to date we're almost 39% increase year over year.
That was something I wanted to ask you about, because I know you'll have the numbers on it. So year to date we're at 39%, which is mind blowing. How about in the last 4 years?
Oh God, it went up 15, 17, I think 21, and now we're at 39% this year.
Breaking 100%?
It is,
if not more. No, more.
Most properties have appreciated more than 100%.
Yes, exactly. So the one thing we're talking to our clients about is you have all that equity tied up. A big thing for myself is our biggest asset is appreciating at rates that are historical. I don't think we've ever seen this sort of appreciation in real estate.
Not in this area, anyways.
Not in specifically. I'm in Windsor currently right now, and Joe is as well. Especially not in this area. Maybe in major cities like Toronto, we've seen that sort of appreciation. But I'm a strong believer of getting some of that equity out of your house and putting it to work, not necessarily back into Canada. If there's emerging markets, which Las Terrenas Dominican Republic is an emerging market, there's opportunity. Of course, with opportunity, there's risk, so you want to be careful. You reach out to us and we'll explain stuff to you in regards to that. But there's enormous opportunity, and utilize somebody like Joe. Get in touch with them. Understand how you can put some of your money to work while you have the opportunity to do it. So Joe's going to look at the equity in your home. How do you evaluate the prices of? You're talking to a client. You're talking to me, for example, and I want to find out, Joe, how much money can I get out of my house? What's the next step for me?
Well, the next step is we'll take an application. We'll see what you can afford.
Okay.
And then from there, we see what your house is valued at. So we send an appraiser out. We make sure that the house is valued at.
So you send the appraiser out, or do
right.
I have to go searching for one?
No, we'll send out
Okay,
the appraiser. It's at the client's cost, mind you.
Of course, yeah.
They'll tell us what it's worth. Now, they might tell us it's worth more than you can afford the mortgage on, because that's the way our market is going right now.
Yes.
But at the same time, you can afford more of a mortgage than what your house is worth. So
yes,
we'll only finance up to 80% of the value of that house on a refinance.
Okay.
So
that's something that 80% is a significant amount with today's housing prices.
Correct.
Right.
If it's a free and clear property and you just want to do a line of credit, you can only go to a maximum of 65%.
I see.
So,
Okay. So again, that's some good information, and when you do reach out to Joe, you'll be able to gather some of that from him again, or reference this video. So now we're at the stage that step number 2 is completed. Now we're at step number 3. You have now received the property value the appraiser has given you. You've received verification of income, which is the same thing in Las Terrenas. Anywhere else in the modern world where you want to get a loan, you want to know how much money do you make,
you got to make sure
and
you
what are
can
your
pay it
bills,
back.
right? So
Yeah.
guys, keep your credit clean and work hard. Moral of the story. So if you're doing those things, then Joe can help you. So we've now figured out you are saving money, you're making money, your bills aren't too high, and your home has some equity. Step number 3.
Step number 3 is basically we put a home line of credit
Yeah.
or home equity loan or just straight up mortgage into play. You have access to the cash, and now you're able to go shopping.
Okay. How long does that process take?
Start to finish is anywhere from 15 to 21 days cash in hand right now.
Okay, so are you saying from the point of having the details you need, the appraised value, verification of income, all those elements, then it is 15 to 20 days?
Yeah, as soon as I get all of the documentation
As soon as you have all the documentation.
and I have an application from you, and we have an online app, we email it to you, you fill it in, and you can upload to a secure portal all your documentation. Then I review it and I say, okay, you're good, you're pre-approved for this.
Okay,
And
great.
then you decide whether you want to take it to the next step. We get the appraisal ordered, and then we close the house, and you got cash in hand within 15 to 20
Cash
days.
in hand. Okay, got it. Thanks for clarifying that. So the process is fairly simple. I don't see anything that is, let's say for a novice, somebody that's never taken a home line of credit or dealt with the bank. It seems pretty straightforward. The interview happens.
Yeah. It's, from a cost standpoint, there are costs involved.
Of course.
So you have an appraisal cost, you have a legal fee. If you're with another institution, you may have a penalty to have to bring your mortgage over or redo your mortgage. So those are all things you need to consider.
So there's appraisal costs. What's a ballpark on appraisal costs? I know it
Depends on the size of the
depends
house.
on the size of the property,
Right.
right?
It could be anywhere from $300 up to $1,000.
Yeah. Yeah. So the cost can range anywhere from $300 to $1,000 on the appraisal. The legal fees are typically, because I know I'll get asked these questions.
Legal fees are, let's call it $1,000 to
Around $1,000.
$1,500.
$1,000 to $1,500. And I'm going to put these notes up on the screen for you guys too, so you'll be able to reference back. So legal, you're looking at about $1,000 to $1,500, and then you've got your administration and all
You
those
could have a
things.
penalty or a discharge fee from your current institution.
Those
set
really
this up.
hard to say what those could be. That
Depends at that.
exactly.
Every day they change. Penalties change
Exactly,
daily,
that's what's
depending
tough.
on cost of funds
and different equations they use for
interest
the
rate
penalties.
differential or 3 months interest. or-
Exactly. So, you know what? I think Joe would be able to, when you do that initial interview, Joe's probably going to ask you, hey, do you have a mortgage? Who's it with? And you'll probably have a pretty solid understanding of what you're going to be looking at, depending on who your lender is. Is that fair to assume? You'll be able to get a
Absolutely.
rough idea, yeah. Okay, guys, so as you can see, the process is not complex. And again, keep in mind we're talking Canada, not the US or any other country. And in Canada, it does not seem too complex from what Joe's laid out. For myself, it was not complex. The hardest thing I felt, Joe, was figuring out who to use. It was really confusing for me. Once I realized and I finally got to you and understood that I have somebody to call, which is what I do on a fairly regular basis, it changes things for you. It makes you nimble and allows you to do the kind of stuff that I'm doing, if that's what you guys are trying to achieve. If you want to live the lifestyle I'm living, if you want to live your dreams, get to Las Terrenas, do those things, it's really not that easy unless you have access to somebody like Joe. So today what I'm doing here is I'm encouraging you guys to reach out to Joe. I know Joe will guide you properly, and he will facilitate any sort of transaction that you're going to need to fund to be able to buy a property down there with us. So I'm thinking, what other elements do I want to touch on? We're going to spend another couple minutes here before we close up. What are some other aspects about the market as you understand it? Because Joe knows a lot of clients that buy properties internationally. What's your understanding of a second home, the way people are doing that? Are you seeing a lot of people doing that nowadays?
Seeing a lot of people buying second homes or buying quasi-investment properties where
Okay.
they'll go spend 2 weeks a year, rent it out, the
Yes.
other 50 weeks if they can, which creates a little bit of tax deductibility on the
I was
interest.
going to touch on that, yes.
Of
Yeah,
course, I'm
he's
going to
gonna
tell you
mention
to check with your accountant on what you can write off
Yeah,
and
definitely,
what you can't.
definitely.
But if you buy a property just for personal use, it will be, you can't write off the interest. But if you are renting it out and generating an income, as long as you claim it on your tax return, you do gain some tax deductibility for this property that you're investing in. The nice thing is we've got products that allow you to segment or grow arms, right? So you can say, okay, this is my primary residence. Here's a second arm or a second segment that I'm going to grow, and that's going to be my down payment for Las Terrenas.
I see.
Then now I have a separate arm that all the interest going to that separate arm or a portion of it gets to be written off against my taxes or what I've made by
That's
renting
amazing.
it out. So
That was something Joe touched on earlier before this interview when we were chatting. Is he was explaining that tax strategy to me. Now, of course, neither of us are accountants, and it's not advice that we're giving you. It's just information that we have and we understand. There is a tax advantage when you are declaring your income that you're making there from your property that you own.
Yeah.
And it depends on your usage, if you're living there or not.
there can be a tax
There can be, yes.
advantage, and we highly recommend you talk to your accountant
Totally agree.
and even check with CRA if you'd like to
100%.
to make sure.
Yeah. The important thing to know is that there is possibilities. So you understand there's possibilities, reach out to those specific professionals and get that information. But that kind of gives you guys a rough idea. So in closing, guys, I think you need to really sit back and look at your goals, understand what it is that you want to achieve when you do look to move to Las Terrenas. Maybe part of that process before you even do that is reaching out to Joe and having a quick chat with Joe, understand how much money you have access to. Therefore, you can understand what you're going to look at and where you're going to look at it.
Exactly.
But there's a lot of opportunity out there in Las Terrenas. Now, of course, Joe can obviously help you out in Canada if you're buying a property here. That's just not our thing. We don't buy property here. We buy property in Las Terrenas. But we can still work together, right?
Absolutely.
Any closing thoughts, Joe?
No, I look forward to all your questions, concerns, and I'm available pretty much 24/7.
Amazing
So-
communicator. One thing I want to compliment you on is communication is quick. I sent him a text, I'm getting messages back. I sent an email, he's blazing quick, and that's something that we really push forward with anybody that's part of our network of people, our professionals. So you're going to get that from Joe, and you're really going to appreciate it. All right, Joe. I think that is it. I really appreciate the information. If there's another topic that comes up, maybe we'll get you back on the channel, and we'll do a
sounds
little
great.
talking, and we look forward to working with you.
Thank you so much.
All right, guys. Thanks for joining us. And remember, please share, subscribe, like this content. A lot of this content is changing the way people are looking at the rest of their lives. And when I say that, I mean it. We're in a tough time right now. It's unprecedented. People are seeing things and feeling things and experiencing things that they never have ever before. And to understand that there is an opportunity, you're not stuck. You can leave if you want to leave. That's what's important. If you want to leave and you want to find something else, it's out there. It's kind of what our mission is right now. We're out in Las Terrenas. We're just showing people and teaching people that you can do whatever your heart desires. And we're living proof of it right now, guys. So again, we really appreciate all the support. Keep sharing this stuff and keep subscribing. And we're going to keep bringing you this great content. It's going to be back in Las Terrenas here in the next couple weeks. So we're going to see you all soon on a sunny beach in beautiful Las Terrenas. Until then, thanks, guys. Thanks, Joe.